Hello traders, Gary Wagner here. It is 12:08 in Honolulu, 6:08 in New York on Tuesday, 2nd day of August 2022, and this is the daily report for gold and silver. Gold briefly broke and traded above $1,800 per ounce as it went to a high of $1,805 prior to statements by two Federal Reserve members that were a little bit more hawkish than the most recent statements by Chairman Powell. That moved gold lower as the direct result of dollar strength. Gold is currently down $11.50 and fixed 20 cents above the low today at $17.7620. The net change is 0.64%. When we compare that to the gain in the dollar today, which is 0.82%, we can see that there was fractional buying in gold, but that was overwhelmed by dollar strength. The one interesting facet, and we'll look at it in more detail when we pull up our charts, is that the 50-day moving average played importance in terms of support and resistance levels in both the dollar and gold. However, it was palladium and silver that took the largest percentage gains in trading today. Palladium lost just about 6.5% and is currently fixed at $2,057. Silver dropped by 2.12%, breaking back below $20. And the September contract is currently fixed at $19.93. One interesting aspect is that the 50-day moving average also defined resistance in silver as it did in gold. Today's decline in gold was all based upon dollar strength. We want to talk about key levels of support and resistance in both gold and silver, as well as our upcoming strategy. First, we're looking at a daily chart of the dollar index, and what we're focusing on is a couple of things. The first is the 50-day moving average, and we can see that really since about the end of February, when the dollar index crossed above the 50-day moving average, it has stayed above there and in no instance actually broke below there. Now, there were two occasions when the dollar index fell just to the 50-day moving average, a 5 trading day period between May 30th and June 6th, that's right here, as well as today's low. Today's low came in at 104.904. Also, you can see that we had a tremendous spike in terms of the net gain in the dollar, gaining almost a full percentage point in trading today. We are currently looking at the first level of resistance not coming in till about 107.25. It is based on these series of tops right here. And of course, the brass ring in terms of major resistance is the recent high that came in at 109.105. In terms of levels of support, the 50-day moving average is minor support, and below that is 104.50, which is what I'm labeling as a major level of support since the dollar has been so strong, and that is the 23.6% Fibonacci retracement. Which takes us to our analysis of gold. Gold did close lower in double digits today, down a little over $10 on the day. It is currently printing at $1,777.10, and that is in aftermarket trading in Australia. What is interesting is that it has hugged below the 50-day moving average, falling well below that price point when it hit the low of $1,678 back about the second week of July. But today, it actually broke above 1,800, went to a high of 1,805, but closed right at the low. When we compress this chart, we can see that we have drawn in a resistance line based upon a series of lower highs, starting at the highest level this year, 2078, this level right here that comes in right around 2000, and then this recent low here that comes in at approximately 1880. When we extend that line, we can see, as we spoke about yesterday, that was a logical level to look for resistance come in. And so therefore, we're putting our levels of resistance in gold first at 1794.20, the 50-day moving average, minor resistance at 1800, and then $1,831 being a strong level of resistance with absolute major resistance at $1,881.40. We are still looking for an entry point from the long side. I'm waiting to see if we can get a dip in gold to fill this gap that is artificial because it was created on a continuous contract when August ceased being the most active and December became the most active contract month. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.